Hello, welcome everyone. This is Seewing Yi, and today I'm going to critique a particular comment on a video provided by Fox Business News yesterday, as a matter of fact, on January the 6th, 2023. And Happy New Year, everyone, and thanks for watching. And I do put out weekly videos about all aspects of what's going on in real time on real estate market throughout the all the important headlines, and also I'll cover real estate investment news as well on my other videos. So without further ado, by the way, as we toward the end of each video, of course, I would love for you to if you see value in this presentation and this video, please smash the like button and subscribe to my YouTube channel. All right, so without further ado, let me share my comment. And this comment by Mr. Brian Lewis. I don't know who is he. He doesn't represent Redfin or Realtor.com or CoreLogic or any of those main websites. But the reason why I chose to critique this video is just some of the comments come out of his mouth is really interesting. It kind of resonates with me and kind of share a lot of the similar thoughts that I have. And oftentimes, if you've been watching my videos recently, I don't necessarily share the comments of a lot of these so-called real estate experts out there because they have their own agenda. Oftentimes, it's all about clickbait, negative headlines, and very distorted, very misleading. The doom and gloom, the sky is falling kind of negative headlines, which is very paralyzing for the unsophisticated consumers out there in the YouTube world. So I'm here to just to dispel any kind of misconception out there and just provide some transparency and some expertise and credibility out there, because I've been doing it in real estate for the past 30 years. And I've been consulting a lot of real estate investors throughout the country of where to buy, how to buy, especially turnkey, low-cost, entry-level homes in the best growing markets in the country for cash flow and generational wealth. All right, so anyway, without further ado, let me go ahead and play this video. And I'm going to stop the video every on a particular comment, and I will share with my comments as to what this guy's each areas of his presentation. So without further ado, let's go ahead and click on this. All right.
Market, new data from the Mortgage Bankers Association showing that mortgage application volume hit its lowest level in more than 20 years in the very last week of December. And the people that are buying homes, well, they're getting hit hard by those higher interest rates. The average contract rate, by the way, for a 30-year fixed rate mortgage, right around 6.52%. That's nearly double the 3.3% rate at the end of 2024. Remember those days? 3%? My goodness. Well, here with a look at the state of the housing market is licensed associate real estate broker Brian Lewis. All right, Brian, for so long, it was such an amazing seller's market. There were bidding wars and homes were being bid up and up and up. Are those days gone? What is the market right now?
Well, Ashley, thanks for having me on. There is no national market. There's the news flash right there.
Oh, the first comment he made, Mr. Brian Lewis, and I really respect him. He said there's no such thing as a national real estate market. All real estate market is hyper local, down to the neighborhood, down to the APN number of the particular property. So I know all these major headlines you see every day out there, YouTube world or in the social media, on the internet. I mean, people talk about the national real estate market. You really have to be smarter. Each market is each specific area is very, very local. So right off the bat, this guy is I can really resonate with him, Mr. Brian Lewis. So let's get back to let's get back to the video. There's no national real estate market. Real estate market is very, very local, specific to a neighborhood. Okay, let's continue.
There, no national market, but there are some trends we can see. Now, when we go from interest rates of 2%, I mean, Ashley, you were talking 3. I've got a 2 myself. So it's like, wow, that's hard to get out of your mouth, right? But when you go from there to 6, the dollar costs more, something's got to give. I just got off the phone with Greg Lewis, my brother in Richmond, Virginia.
Okay. I mean, this is amazing, right? I mean, this past 18 months, up until 9 months ago, we're experiencing some historical interest rate, mortgage rate. I mean, look, I remember, I think he might have said that back in early 1980s, the mortgage rate were as high was 18%. So, so we've been spoiled as consumers. We have been spoiled in the past 10 years with a very, very low single-digit mortgage rate, anywhere from 8% to all the way down to 2 to 2.5%. So good for this guy, Mr. Brian Lewis, the speaker. He has 7 mortgages at a very, very low rate. Myself included, I have a number of homes, still existing homes in rental properties that have mortgage rate of less than 3.5%. Clearly, including my principal home here in Bay Area, San Francisco as well. All right, so let's continue with his comment.
Virginia, and he has 3 offers on something today. I've got a property right here in New York City that was below the 1.5 mark. We got multiple bids. The thing is, it's going to cost those buyers more money to buy the same thing they could have bought a year ago for a lot less. So it all comes down to that monthly payment. So Ashley, the last time I checked, when rates go up, prices come down a bit. When rates go down, prices go up a bit. But here's the thing about America, we don't have inventory. Guys, it is tight out there. So the buyers
is it still like that?
Well, he mentioned a couple of things, right? And of course, those of you that stay in the sideline a couple of years ago, well, you missed out. Of course, I mean, I'm not here to criticize you, but the people that took action, they're locked into a very, very low historical low interest rate, 3.5%, 3%, 2.5% 30-year fixed rate mortgage. Now, this is mind-boggling. And now that the interest rate has gone up, and so we see the affordability factor of being severely impacted by many potential buyers out there. And then he said the inventory is tight, okay, TIGHT. So my takeaway from this particular comment is that we are having a very low supply of inventory of homes in the country because the sellers are locked in the interest rate. The homeowners, that is, they have massive amount of equity in their homes, and they're not willing to trade a 2.5% interest rate to move up to a 6.5 to 7% mortgage rate. That is ridiculous. So that's what he's saying. The buyers can't afford to buy due to the 40-year home affordability issue because of the skyrocketing of home prices in the past few years. Plus, the mortgage rate has skyrocketed from 3.5% earlier this year, 2022, to all the way up to 7.5% this past October, and then now back down to 6.3 to 6.5. So inventory is very tight. Well, in my mind, inventory will continue to be very, very tight as we move into the first quarter and the second quarter of 2023. And pending sales is decreasing. There are very, very few transactions out there in the country. So economics 101, when demand exceed low supply, we can have a very positive real estate market for the future. So remain to be seen. The next 2 quarters, we can have a very low inventory, and if the interest rate goes lower than current rate, mortgage-wise, then we may have a housing frenzy. We may have a lot of positive activities moving forward. So tight supply of homes is saving the economy, is saving the housing market right now. low supply of homes so far. All right, so let's continue.
Well, market to market, I can tell you in New York City, it's tight. In Richmond, Virginia, it's tight. Some areas of Chicago, it's tight. My Los Angeles offices are saying that it's tight out there too. So it's not, the buyers have way more power. Let's be clear. And there's fewer deals being done. There's a compass sign right there. And, but the fact is, the buyers still don't have that many options. America needs more housing. Note to developers, get out there and build us some more housing. We need it.
But the problem is, yes, I agree. The developers and the builders need to build more homes, but now the builders' confidence index has been down because of the lower demand due to the higher interest rate. The builders are pausing construction, right? And there are some consequences. There will be some ripple effect for this, right? And the permits are new permits are way down throughout this 2022. The builders are trying to sell off the remaining blood of excess inventory they have on their homes, and so because of lower demand, the builders are not constructing newer homes. And all of us have this short-term tunnel vision, if you will. But if this trend continues, if the construction industry, if the new builders are not building enough inventory to satisfy the demand of homes in the next few years, I foresee, and you hear from me, a ripple effect of builders not building in the next 1, 2, 3, 4 years into the future. Toward the middle of 2020 something, 2024, 2025, we could have a persistent lack of new construction homes to meet the growing demand of prospective home buyers. On top of that, the existing homeowners right now, they are sitting at their homes, locking at the rate, and they have very little incentive to sell. So things are looking very, very challenging moving forward. So let's continue.
Because the alternative,
we've seen
alternative is renting, guys. And the last time I checked, rents are going up and up and up. And I mean, my parents in the 80s, they had a double-digit interest rate. I mean, can you imagine?
Yes.
5 and 6, not so bad compared to that. And what did they do? They bought, they had the power, they got in at a price they could afford. It made sense for the family. And they refi'd down. And you can do that. And the smart banks right now are offering products, and they're saying, we'll give you a refi in the next 2 years without charge.
Yep. Again, another takeaway I have with this guy is, imagine, right? Myself, throughout the past 30 years, I have bought homes and investment properties at a much higher rate than today's 6.5%. And because it was the right time to do it. It was not under stress. I did well, as many investors have done well as well. So, I've bought homes with 30-year fixed rate mortgage of 10%, early 90s, 8% in the mid 2000s. And then in the past 20 years, I bought investment property with mortgage rate of 6 to 7 to 8%. And I did fine. So for those of you, I know, though currently you guys are going through a sticker shock, a psychological effect of the skyrocketing of rates from 3.5% to 6.5% right now in a mere 9 months throughout 2022. So the sky's not falling. You guys are not doing that bad. Also, the people that cannot afford to buy right now, obviously they are renting. So there are more people are in the rental pool than in history, as far as I'm concerned, for the past 50 to 100 years. So there are more people who are renting right now than ever before in the history of America. So if you are a real estate investor like myself and hundreds of our investors that I've helped over many 20 years, helping them buy cash flow properties, right now is the best time to be a landlord because the rents are going are getting higher, as this guy, Mr. Brian Lewis, are talking about it, and rents are increasing. There's a lack of homes to rent. many people are renting, and along with the inflation, the rental rates will continue to increase, especially the single family home investment rental space, which is my forte. So so far, Mr. Brian Lewis, this guy being interviewed, really resonate with some of my overall real estate investment philosophy. So let me see what else he has to say. In a few more minutes, we should conclude with this video. So anyway, let's continue.
They're going to waive some fees. So
You know, I
banks
can't-
have to be creative.
Right. Brian, let me say this. I got to this country in 1982, a mortgage of around 13, 14%, thought we got a steal.
That's right.
How high it was in those days. So when you say 2%, it just boggles the mind. I want to ask you about, we saw a big shift of people during the pandemic coming out of the big cities, looking for those homes with a home office. Texas, Tennessee, Florida really were the very
For
hot markets.
sure.
Have they cooled down there as well?
Well, I can tell you that my Florida friends are busy, but instead of getting 6, 7 offers, they might be getting 2. But it's all case by case.
Yeah.
And guys, even in one market, there's micro markets. Here's what I know. I know if the dollar gets weaker, those foreign investors come right back. You said you came here in 1982,
Yeah.
Ashley. There's a lot of investors. They look at the American market, and our market on its worst day is better than most markets on their best day. So I'm bullish on America. I'm bullish on New York. And I think that foreign dollar is going to come right back.
Wow, he in a mere few seconds, this guy, Mr. Brian Lewis, has have touched on so many important points. He touched on the fastest growing area in the U.S. By the way, that's where I'm taking my real estate investors into, the South and Southeast. We're talking Central Texas, South and Southeast, Florida, Tennessee, Alabama, the Carolinas, and Georgia. These are the hot spots for, for everyone. The real estate market is growing fast because the homes are very affordable, and the migration patterns with the remote work. So most people are migrating into the South and Southeast because the homes are still affordable, believe it or not, especially even in, so my Florida is my #1 market, and, Texas, the sub-markets are also very well. Alabama, Tennessee, these are very, very affordable. We see a second wave of migration of people moving into these sub-markets, if you will. So, and then here, Mr. Brian Lewis also said about the foreign investors. The foreign investors, they've been buying homes, vacation homes, rental properties for years now. Foreign people from South America, people from UK, people from Asia are really converging. I mean, a bad real estate market here in the U.S. allegedly are good for foreign investors, because foreign investors is a safe buying real estate in the U.S. for foreign investors is what you call a safe haven. So there are, most foreign investors, they're buying in Texas and in Florida, especially in Florida, people from South America, in Brazil, for example, and Central America and over South America. They're coming over to Florida, especially Miami. They buy with all cash. They're parking. There's a save money. It's very, very safe to buy real estate in America for the foreign investors. Then you have, most of them are buying single-family homes. Single-family homes, in my estimation, is a #1 asset class among all asset classes. All right, just hear me out. So not only that, the hedge funds, right? Wall Street, the institutions, the institutions, they are buying in bulk single-family homes in a hot Sunbelt markets, in Sunbelt, right? South and Southeast mainly. There are some Southwest markets that are still very, very hot, especially for deep pocket investors. So it really, resonated with me. So that's pretty much conclude my video presentation. My takeaway, Mr. Brian Lewis, rarely I pick apart a particular video interview by the so-called experts. In this case, Fox Business News have done a good job interviewing this guy, Brian Lewis, because everything he said really resonates with me. So my overall takeaway is, if you're a primary home buyer, if you can afford it. Long-term wise, you have to buy and hold long-term, whether you're primary homeowners, owner-occupied, or real estate investors. We buy in a good market that can cash flow for investors. You can buy and hold for a long time. You can overcome any short-term volatility, right? So anyway, hopefully you receive a lot of good value from this video. If you have, please smash the like button and subscribe to my YouTube channel and make comments below. And I would, more often than not, I do respond to those thoughtful comments, that is, rational comments below. So, and also finally, just subscribe to my email or my real estate investment database newsletter. You can receive a lot of weekly great information on real estate investing, turnkey, out-of-state, low-cost cash flow properties, done very nicely. Thank you so much. And this is Seewing Yi, and I will see you all on the next video shortly. Thank you so much. Have a nice day. Bye-bye.